Okay, good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, May the 11th of the year 2015. Like always, I want to welcome everybody on board, new as well as old, and let's get right into it, get through the disclaimer. This webinar is for educational purposes only. I'm not a licensed representative or getting any China trading advice whatsoever. Trading does involve risk, especially trading options. Okay. Well, this market finished up today down 85 points. A lot of it is due to the Fed, one of the Fed presidents in New York speaking this afternoon. The market tanked real hard right after that because he alluded to the fact that they're not going to give any kind of verbal language signs in any of their meetings of a potential rate hike like they did in 2004. And that scares the market. Everybody thinks that raising interest rates is going to be bad for the market. It is, because the cost of borrowing money becomes more, therefore the margins become smaller for corporations, and there is less profit to be made. So the market does not like rate increases, but it does like certainty. And basically the Fed chairman said, we're not going to give you any idea of what's going on. Good luck. We're just going to suddenly hand it out to you. And they're going to discuss it every meeting. Is it going to happen in June? I highly doubt it. September is not necessarily off the table. It's all going to be based on the economic numbers that come out of the government. So with that said, let's go and look at the macro picture. On the left is the Dow, in the middle is the S&P, and on the far right is the NASDAQ. I've taken the liberty to draw in a box, if you will, a rectangle, of where this market is stuck in, as well as where it has to bust through if it's going to continue to go up. And that's 18,197 on the Dow. On the low side, we're looking probably around 17,850 in that area if it's going to break to the downside. And that would probably be hitting right at the 89, which would be acting as a support level. This is acting as resistance on the Dow Jones. On the S&P, it's a little tighter range here, if you guys can see this. Yeah, everything does stink, I know. It's a horrible market right now to trade in. As I say, the only people that are making money right now are kind of people like me that just scalp the market every day and, do a stealth ninja, get in, get out. Make a couple $100 a day and then leave. Very difficult to be in a longer term position. But there are some trades I want to talk about that I think are breaking out that are well worth us taking a look at. DPO is still coming down. We have really mixed signals all over. You can see up, down, up, down, up, down, just a hairy mixed market. Let's see the same thing here on the detrending price oscillator on the S&P. And of course, in the NASDAQ is a little bit different picture. We are still stuck in this trading range. Needs to bust above 5,042 on the NASDAQ and above 2120, 2121, thereabouts on the S&P in order for things to move upwards. On the once again on the bottom side, I could just snap a real quick line here. You can see about 2087 on the downside for the S&P if it's going to break down, and on the Dow Jones, like I said, about 17,850, 860. And on the NASDAQ, if it is going to break down, we're probably looking right around. And again, you can see where a lot of where I'm snapping, like this 48.84 on the NASDAQ, is right at the 89 level, which is going to act as support, as well as the 17,860, 850 for the Dow. Here is going to be more the 49 is acting as support. So look for these key levels for breakout or breakdown. Okay. All right. Now let's take a look at the VIX and the S&P. I want to bring out, and I drew these boxes in here for the S&P 500 because the S&P has tested that level, which is the 2120 level now, 3 times. And it hasn't made it. So if it's going to make it, it has to bust that 2020. And I do believe long term I'm still bullish. Short term, however, there's an old saying, sell in May and go away. Now, a lot of that adage may not be as true today as it was in years past, because we live in a different world right now. But there still is a historical precedence for this market to go down during the month of May. So short term, I'm kind of in a bearish setting, and I believe that we will see some volatility coming up. Not like we haven't, but we're going to see some volatility on the downside. Remember, one little hiccup in the geopolitical situation, be it out of Greece or China or any place, will send this market reeling. And the dollar being as strong as it is going to continue to go. Let's take a look at the short term now. Let's see what's happening out of the government for this week. Really, this week is I think the biggest important thing that's going to be coming out is all the retail industry. They're the only ones that haven't reported. Macy's and Kohl's and all of these big companies, because their quarter ends the end of April. They're all going to be reporting coming up. I don't play the retail market at all. I just don't trade it, don't like it. Some of you may, but this is the big one right here. Retail sales and what is going to cost. The rumor on the street is they've done pretty well over the last 3 months, meaning that the consumer, which makes up 2/3 of the economy, is spending money. And I always believe they will spend money. I mean, comes Christmas, comes Thanksgiving. And do we have to wait that long before the market's going to start really jumping up again? Not necessarily, but between now and September is going to be a tumultuous time, especially because of all the information coming out of Europe, specifically Greek. They have a lot of deadlines to meet. Draghi, of course, has got a boatload of money and he can weather the storm. Greece will not totally affect Europe. Mark my words on that. Jobless claims and the PPI index is coming out, and then we have the consumer sentiment coming out on Friday, as well as the industrial production. So these are the things to look for. It's really not a heavy week, believe it or not. The big one is the retail sales, as well as what's the pulse of 5,000 Americans, how they feel about the economy. That actually comes from my alma mater, University of Michigan. So that's the short-term picture of what to look out for this week. Be aware of those things and take appropriate action when you see those. Remember, some of this stuff is built in, some is not. The market will react to this information. Okay. All right. I want to bring up best choice. And here is the S&P 40 years worth of history. Maybe 42, setting and best rating a whole of all coordinates. If you look at this area here between May and June, and I highlight this area, I know there's another one in here. There it is. 60% probability. Again, not that great, but historically, when you go all the way back to 1970, so that's 45 years worth of history, there's a precedence for the S&P to go down. With the Dow Jones, we also have history that goes all the way back to 1971, same area. And again, we have a precedence that the market goes down historically. If I use a little bit tighter range and use the symbol asterisk DJI, which brings up the Dow Jones, just coming from a different source, and it gives me history that goes back to 1999. Well, hold on, 98. So as we look here in this area, and I snap this area, we have a little bit higher probability of 68.5 versus 60% of the market going down during this time in the Dow Jones. I could show you the same thing on the NASDAQ, CO asterisk COMP. Not as great. It's more froggy towards the end of the month. It seems to take a jump. I can't find it's like a 50-50 around this time. So the NASDAQ really isn't the pulse. It's really, we have to look at the S&P and the Dow Jones to get an idea of what this month is going to be like. Okay, speaking about the month going down, there are some ETFs I want you to look at. One that's very, very heavily traded is the FXI, which is the China ETF. If you go to tab 3, set up for best profit per trade, you can do best trading a coordinate or even best trading a whole zone. It doesn't matter. You snap this area, it's going to highlight blue, and it's showing over here on the legend there's a 90% probability this market is going to go down. Well, for the ETF, this particular ETF, the China ETF, with a 3.94 precedence of it going down. Unfortunately, with the option chain right now, I can't show probabilities or percentages or profits on the put side, be it with national data or with thinkorswim on the data setting. So I will go to the thinkorswim charts to show you this. Oh, that's another one that I think is breaking out is Tesla, and I believe that's going to continue to go up. I was looking to play the weekly on that. Actually, did it pull back? Good, it did pull back to 439. I think that I was looking at the 237 and a halves. I was able to get it cheaper. I was getting a 223 earlier today, so I'll see how it moves tomorrow. You could always go, right at the money. I generally like to be a little bit in the money, have some intrinsic value on the call side I'm doing when I'm doing a spread. Now that's cheap, $5 spread from 140 to 245. I know I'm bouncing here a little bit, but anyways, it's a trade I was looking at. FXI, let's finish with that. A lot of interest, of course, on the short side for it going up, as well as 88,000 on the short side at the 50s going down. If you want to play the spot month, or the spot week, actually, this is the spot month, the closest monthly expiration, but it also happens to be a weekly because there's only 1 week left. That 64 cents for the 50s, and it went down 44 cents, is a pretty good buy. That's about 1.1% premium. And as I say, when you have a historical precedence of 3.94 of it going down, you've got a good probability of making some money. So let's analyze that real quick, FXI. Just on the spot month, you see here with the probability, it could go down to 48.71. What did I put for the Excel sheet? 48.70. Oh, now it's 48.69. I put a target of BCS target of 48.51. So, we're talking within 17 cents. Price I looked at for the 48 and a halves was 55 when I was doing the homework over the weekend. And there's the IV plus target as well as a break even if you were to purchase the 48 and a half put on the FXI. But let's finish analyzing this. Yeah, I will, Robert. Did you get my email? I sent you an email in regards to the difference between interest and volume. I'm sorry, one of our members is asking me to discuss the difference between open interest and volume, and I will. I just wanted to make sure that, Bob, you did receive, I did respond to you in regards to what the real difference is. And, is it suspicious? Well, yes and no, and I'll go into that. Anyways, we expect about a 4% move, right? 3.94%. So let's call it 4%. So if I change this here to 4%, that it may go down to, and I say, all right, the probability says 48.68, target on best choice is 48.51. So let's go to a sim trade and say that we looked at the 50s for this week. If we just bought these 50s at the money, or there was 12,000 purchased today, probably more than likely purchased. So if I paid 64 cents for the weekly expiration 50, where the underlying is at $50.07, and it moves down. Now, remember, this move runs to about the 23rd. You see that? 5/7 to 5/23. So what I like to do is kind of get pretty accurate to that date over here. I can change the date to whatever I want. Let's go to, well, see, I did it the 26th because the 23rd is a Saturday. I remember talking to Pete originally on this with Best Choice when those dates on Best Choice come up and it happens to fall on a weekend. What do you trade, the day before or the day after? And he says, well, if it falls on a weekend, you can't trade that day, so you naturally have to trade the following trading day. Well, it happens to be the following trading day because there's evidently a holiday coming up on the 25th is the 26th, and that's why I put the 26th here. So based on a 4% move down to $47.99, that's $137 profit on a $64 investment. That's over 100% ROI on my money. That's not bad. If I said, well, if it's only 3%, can I at least double my money? Well, not really, but close. I made an $87 profit on a $64 investment. So not that much, maybe a 20-30% profit if it only moves to $48.49. But you've got that's based on a $1.43 move. If you take 50 and subtract the $1.438, gives you 48.58. So it's real close to this. I'm not suggesting that, but I'm saying that could be a play for somebody. You could also very easily do a vertical on this for very cheap, for 21 cents. And if it does move down only 3%, then you're making a very significant amount of money, actually. That's that's only a 50-cent spread, so you're actually able to make 24 cents on that. So really, you can double. I don't know why it says 130, because really the most you could make is the spread difference between these two. So that's FXI. When I was looking through the ETFs, there's a couple of more. Again, I'm being bearish right now because I think this market is bearish, and it's going to be. SDS is another one. It's the ultra short, so you have to be Alice in Wonderland in the way you think. What did I say? It's a 75% probability, so let's try best rating. Where is the long? There it is, 75% probability of the SDS going up, which means it makes money when the market goes down, okay? And that's the short on the S&P 500. I already showed you the historical probability of the S&P going down. So now tomorrow it looks like it's going to start moving. There's a 90% probability based on that hash mark, which I have done a lot of back testing on, and I found that thing to be pretty doggone accurate as far as the next day move. You know, it's the original swing trading program that Sonny asked Pete to develop when the software was first done, and it's pretty doggone accurate. So looks like this move may be looking to go, so you may want to look at taking a position in that fairly soon. I put down the June 12s for this when I was looking at it. June 12s. Oh, I must have meant 21 and I put 12. Freudian mistake. 21's right here. 53 cents. What did I have it down for? Oh, actually, no. The SDS I did talk about. I'm sorry. I did a little bit more research. My bad. 6 days left. So it had to have been. See, since this historically runs to the 21st, I looked at different weeklies on this to see, you know, where people were loading up. Is anybody here? Well, there's the 21s here for 25 cents. There's the 21s here for 18. Since it's already gone up, it's a little bit more expensive. It'll cost 18 cents now versus 15 when I first looked at it. But when I did all the different analysis of which strike price based on the expected move gives you the biggest bang for the buck, I believe this is the one that, no, even though there's a lot of open interest there. And we're expecting, again, these aren't big moves, folks, so don't expect huge returns, but you will make some money. 3.19%. 93-cent move puts you down to about 19.5. 3% move. Actually lose money. If it goes down, you only make 12 cents if it goes up 3%. I'm sorry, so this should actually go to about 22. Now 21.89, because if I add 93 cents over here, IV plus, to this, that puts me at about 21.30 thereabouts. So let's bring this down to, there's 21.28. $13, maybe about a 50-60% move. Another security on the security side that is going down is Las Vegas Sands. For some reason, it typically goes down this time of year. What did I have for this? I had 100%, so somehow this must have populated on a list. Oh, there's a 90%er. And I was looking at the May with 20 days left, so that would be 19 days. Let me take a look and see, where did I find this? I ran a bunch of different lists, overbought too. And we could take a look at how I found these. What does this one do? Well, BIDA has still got a ways to go. There's your Tesla long right here, but it's already done its breakout. You can see this distinctly right here. Here's the 200, and here's the 10 and the 20 EMA. One of the things you should do also is also look at a longer term. You can do this even with Best Choice. Go to a 2-year, show you a nice, a different picture, I should say. Why is this not showing me what I want? Weekly, that's what I meant to say, not monthly. Take a look at the weekly. 2-year weekly. Now there's a nice little breakout, right? That's what you want to see. So always remember, look at the macro picture. You got a nice alligator mouth down here, opening up. You have the 10 crossing the 20, bouncing off the bottom. It's crossed the 50. This is again on a weekly. Folks, you're going to have to excuse me for 1 second. My dog is going absolutely nuts, and I need to shut him up. So give me 2 minutes, or 1 minute, I'll be right back. My apologies, and thank you for your patience. So again, look at the macro picture. It's very, very important. It gives you a different perspective than when you're looking at a tighter picture. That's the other reason I think Tesla is a breakout. And you can always switch this back to daily. And daily kind of shows you the same thing, except just tighter. Which is one of the ones that I did again, put down the Tesla June 260s for just a directional. I like to play the weekly bulls on it because you can make good money. Bow-call spreads, and it's tighter, meaning that you're not going to be subject necessarily to the volatility that happens when you're buying time, and we're in this absolutely volatile, crazy up and down market that we're in. You can just play for a little bit of time, and when you have a breakout like this, you always take the chance that if it goes against you, but with a spread, you're always limiting your risk to, of course, the exact dollars that you're putting up. So anyways, there's SDS. And then there's also one other ETF I was looking at, SRS. And this thing is an 8 out of 8 long. It's got a half blue mark, and it's pushing towards that 200. Let's take a look at a more larger picture. 2-year weekly. Well, 2-year weekly, it shows it's going to go down, but again, you have to understand how to look at these things. And really, what is it saying? When you have a 10 EMA crossing the 20, that's a breakout signal. And this right here is a bullish engulfing candle. So this tells me this thing is off to the races. And this is the short. It makes money when the real estate market goes down. So this is a pretty good looking trade from a seasonal perspective, as well as from a technical perspective. Now, if you look at what the open interest is on this, this is where I can start talking a little bit more about this. SRS. There's an example of, I think, what one of our members was talking about. I was talking about another security. But he was discussing about how there's a lot of open interest on this particular security. But volume was real light. And you can see that, and you think, well, is there manipulation involved? What you don't know is, are these people selling? The likelihood of selling at the money is very, very small. People that sell premium credit spreads, they go out of the money. They don't ever want to have to worry about the price hitting their short selling strike price, because then they may be exercised. They want to go so far out of the money that possibility is, the probabilities of them making money are extremely high. The possibilities of them being exercised are extremely low. And the way to do that is by going far out of the money. So this really, to me, says these are people that are buying and are holding contracts on an overnight basis to the June expiration. They haven't exercised them. Now, what we don't know is this offsetting some other short position they may have. It's very possible. But either way, they're buying it long. And then when you look at the flip side and you say, all right, is there the same amount of open interest on the short side? If there is, that means people are uncertain about the market. They don't know if it's going up or down. So they're playing it both ways. They're playing a straddle. They're straddling the strike price. So if there was, and you could very easily go here and say, all right, what if I wanted to buy a straddle? Well, there's only 173 people that are buying straddles out of the total of 2,158. So this doesn't tell me this is people with uncertainty. This is telling me people, there's only 173 out of that are more uncertain. So without belaboring that, I was looking at the, this is where I was dyslexic. I put the SRS 21s and I did the other, and so I flipped it. This is obviously the 12s. And let me change that So it happens when you stay up late. All right, let's go back to Las Vegas Sands, LVS. I know this is on a list that I created. It's obviously not on this one. I looked at all of these as well. It's not on that one. Could have been on the weekly cycles because Las Vegas Sands is a weekly. There it is. And there's my 100%. Hold on 1 second, folks. My stove is beeping. Once again, my apologies and thanks for your patience. So there's the short that I was talking about, 10 out of 10. Even though that's kind of weird. Now look at this, these are negative moves. I don't know why it's saying that's 100%. Let's hit the puzzle piece, see what happens. I may have to change it, may not be 100%. Sometimes that happens, just bad data. Now, I got an 80%, starting right about now. Where is it sitting at? There's a half, 90% probability hash mark that it's coming back down. It'll probably test this level here. And if it breaks through that, then it's going to continue going to the downside. You can see there's this level right in here. That would be the last time it's been real low, and that's of course the end of June. But you can see here what happened in May when it was overbought. It just continued to go down into June as well, all the way down. So if that precedence continues, let's just take a look at the linear regression chart. Here's the area I'm talking about in May. You can see the date here. There's May 16th. It kind of meanders sideways and then crashes. Of course, this is just continue to go all the way down through the month of May and just continue to crash. Here's again May 6th, May 17th. He continues to go down. So there's a good historical precedence over the last 3 or 4 years. Now, I do see some concerns a little bit here because there is definitely support that's happening at this 51 level. So let's go take a look at my charts and see what they say. 6-month chart, everything tells me to short this thing and continue. And I put a short-term trade on this. I think it's because I found that with a pretty high rating, 4.7, 5.3% move, only missed 2 out of the 2 years. I know if you look at it from what I just looked at on linear regression, it shows that it went down each year. So take a look at, you could play June, buy yourself some time. A lot of open interest on the call side. 14,644 at the 50s on the short side. And yeah, you could buy yourself some time, $1.31 on a $51 stock. That's not too bad. Gives me a premium of only 2.5%. It's reasonable. Money could be made. I probably would have done a little bit shorter, and I put, evidently it must have been this one. Yeah, I saw this right here, 907 volume. That actually came in today. I think that's the week I was looking at. Or was it this one? What price did I put? 44 cents. No, this premium would have gone up because this stock has gone down. And this one here, yeah, more than likely that's what this one was. 58, it's already gone up. But any one of these, just depending on how much time you want to buy, I mean, the way I see this is there's some time involved here where it's going to continue to go down. One of the ways you could see how far down it's going to go is do an extension. Go from a high to the low to the last high. And you can see where it's going to potentially retrace to. It's bouncing off the 78.6 right now. Could go down to 49.55. And of course, the next one is way down here at 43.15, but that's at the 161.8. There's other ones in between, 1.382, 1.5, 1.786, all the Fibonacci's. So gives you an idea. And of course, the low is 48.13. So playing the 50s is pretty safe in my book. Okay. One of our other members, who I've known for a long time, said, what did they say? He said something about oh yeah, I already talked about FXI, and this one I didn't look at, but let's take a look at it. It's DEER, D-E. Oh yeah. Okay, yeah, 83.33%. Let's not do 12 years, let's do 10 years instead. Bob, take a look at those same emails. It's within that. I know I sent it. There's 3 separate emails I sent. 80% probability goes down. Next question, where is it sitting? Way up here. It's got a 75% probability of going up tomorrow. But it may top off right here. I mean, from a technical perspective, this is actually a pretty bullish looking sign. But I also see a bowl start to form, like a big cup. But we have a historical precedence of it going down pretty strong. Yeah, there's a 90%er. So when do you want to buy a put? When it's going down or when it's going up? Anybody want to answer that? No, not when it's going down. You want to buy it when it's going up. It's a good time to buy a put when it's sitting up here at the 82.1% of its extreme movement. And on a 3-month, this baby is way overbought, 97.7%. Kind of hit that 91.40, same level where this closed at. It closed at 91.39. This thing opened at 91.38. The high was 91.44. So there's obviously some resistance at this 91.40, and it pulled back and closed below it. So if we have a historical precedence of 90% this stock going down with a 5.3% move, let's take a look at some options. I haven't analyzed this yet. I just got this from somebody recently. Yeah, lots of loaded interest on the short side. And there's also open interest here on the long side too. Now this is June. I wonder if it pulls up a little bit. Well, yeah. So as soon as you short it, you turn around and pull it long. Nice little swing trade there. Where is it sitting at in its historical movement from the lowest it's been to the highest it's been? Let's take a look at that. Yeah, kind of set right up there, following kind of the historical pattern where it rolled up, this pulled up, starting to curl over. Now I see some green dots here. I don't know if this is earnings related. Let's take a look. Ah, there it is, DE on the 22nd, Friday, before market. So this is not a RUI, a run up into earnings, but a run down into earnings. So that's kind of what I would probably do with this. Let's take a look here. Yeah, it's definitely breaking out, but it may just stall right here. It may stall at the 68.1, and then come back down to probably this level in here, 89.90. So I think we'd be very safe in buying some 90 puts on this. For $1.74, that's probably about a 2.2% premium. Your break even stock would get down to 88.26, and it has almost a $5 potential IV move. $5 subtracted from this definitely puts it at below 88.26, which is what you want. And from a historical seasonal perspective, it has a 5% probability move. 5% away from $91 is just about $4 or $5. So I need to put that one in. Anybody like to sell premium in a volatile market? Yeah, while it's going up, Jerry. That's how I trade the E-mini. You know, I was going to show you an example of what I saw today in the E-mini. These are patterns that I look for. I'm going to change this to a tick chart. Change it to a 512, and show you what I was looking at. Where was it? It's right here. Can anybody recognize what this pattern is right here? It was a perfect head and shoulders. Perfect head and shoulders. As this thing was forming, I saw it form, ran up, touched, went back up, and then collapsed. Oh, my bad. Not there. Here. There. See if and these are things you should look for. I saw this pattern here, and I was coming into the trade for the long someplace in this area here because I saw this pattern forming. So yeah, it suffered, but then as it ran up, that's where I took my profit. So I bought in this area here. This is just a reverse example of, do you short a security when it's running up? Yeah, if you have some precedence that it's going to do that, not just blindly going in, of course. I have historical precedence of 90% that Deere is going to go down. If I look at Deere's charts, now this is way too short term to look at. Well, you can definitely see it's meandering sideways here, but let's go back to a time chart. And let's go to 3 months. Yeah, you see it's last 3 months price has been trending down. There's definitely some resistance, like I said, right here. And even though this is a breakout, it may pull up a little bit more. Okay, and maybe you can even buy a cheaper put. But do you want to wait for here and then you suddenly see these two things come in a row? Now you're chasing the train, and those puts are going to get more expensive. I like to maximize potential profit. I've learned that from trading the E-mini, to where I try to time my trades a lot closer to where I can get. Now, granted, not everybody has the time that I do, so I understand that, but I'm trying to give you some ideas of techniques you can use that helps you. So, yeah, I mean, right now, that DE put is costing $1.74. In the next couple of days, it may be cheaper if this continues to run up. So, maybe I'd wait for a stall, a doji. Maybe I'd wait for a tighter time frame. See, I see things, I already see the hull turning over here, a DPO that's coming over. I see a lot of things that would tell me to go ahead and purchase a put right now. Only because I have historical precedence, even though these 20 days looks like it's continuing to run up. Okay, nobody answered me. Does anybody like to do credit spreads? One of the reasons I'm talking about this is one of the most highly traded indexes, of course, is the SPX. You see there's wild swings here happening. Okay, we have this historical precedence. Of not a big move, 0.53%. Let's do the SPYs. Maybe that's a little bit more blatant. Yeah, there you go. 80%, 0.92. You could do the same thing on the SPYs as well. And that's sell a call spread. Collect some premium, short term. Let's just do the SPY since that's what I was showing. As you see, tremendous liquidity, folks, on either side of the equation. Wouldn't go out to June. This is shorter term. All right, I see 30,000 open interest at the 208s. And we expect not a big move, do we? 0.92% move. Well, it takes me to 208, and I can see why people are coming there. It looks like they were going to try to stretch a little bit further, because I got an IV move of $4.84. $4.84 takes me down to 206. I don't think I have that. See, I don't have it, unfortunately, here. I don't have the IV ranks on the indexes. They don't show up for some reason. So the only two things we have to go by is that IV plus or minus $4.84 puts me down to 206.5, 207, definitely below the 208. So you could just buy a directional put, or you could go out here and sell something, right? Sell the 215. There's a 12-cent credit. It's not a lot, but it's only a $2 spread. So you have to look at it and say, all right, if I make $12 and it's the put up is $2 or $1, excuse me, that's $1, right? Between 215 and 216 is $1. So it's $100 I have to put up to make 12. Doesn't sound like a good deal, but you have to ask yourself with the historical precedence, is these within 18 days, is the SPYs going to go to 216? That's what you got to ask yourself, or the 215, excuse me. The 215s, because that's your short selling price. Is it going to drive up or is it going to go down? The whole way that you collect premium. Now, you ask yourself, okay, I'm going to make that $12 and so in other words 100, of course, we know this is a 12% return, right? Because if you're making $12 on 100, I'm sorry, yeah, it's a 12% return. So I don't even have to go through the calculation. If you make $12 on $100, that's a 12% return. And you're making that within 18 days. Folks, that's pretty doggone good money for putting up, a 12% return in 2 weeks. Now, you could go way out here too and say, all right, I'm going to do the same thing. I'm going to sell that 215 and I'm going to buy the 216 for protection. Oops, sorry. Sell the 215 and buy the 216. Now you got 31 cents. But you have to wait all the way to June. And the way you do credit spreads is you don't have to have a lot of time. You don't want a lot of time. 2-3 weeks generally is what you want. But I tend to be a shorter-term trader. You guys know that about me. So I'd rather go for 2 weeks or 1 week and expect that thing to go down and then collect my money and say thank you very much, Mother Market, and move on to the next trade. So you could sell some credit, some call spreads, basically, or call credit spreads on the SPYs, since we know that they're bouncing off of here and pulling down, way overbought, DPO pulling down, Hull pulling down. Everything tells me on a 20-day that this is going to be coming back down, and there's the last low. So you could, what kind of retracement did this do? Well, it didn't even make it up to the 100%. It stopped right there. Again, that was at 211, 212 on the SPYs. It's the 2120 on the SPX. It's the same thing. Okay, the other one that you could do a call spread on is the Russell 2000. And I had my notes. Where's my notes? I have all sorts of notes. I wrote down Russell 2000 is up. It means no overall correction in the near future. That's a note I read to myself, and there it is. See, it's still, and even though I'm saying buy a call spread and it's up, and you say, why would I want to do that? Well, it's not going to move that far because the rest of the market's going to keep it flat. But this one, 2000, is the solving grace that I see that's telling me, this isn't doomsday. Okay, but some sector, I don't know which. I don't know if it's going to be the tech sector. I don't think it's the financial sector, but some sector needs to step up to the plate and move this market if it's going to go and be bullish. I think it's going to figure itself out here in the next 2-3 weeks. So you could also do the same thing on the RUT. And this is definitely going down. So selling up here, some calls and collecting money, as this thing is all indications telling me it's going to go down. Again, overbought DPO, 3 triggers here, including on top of linear regression, and the 49 is below the 89. So that's another thing. You could just go to RUT, go to June. I don't know how far out you want to go. It's at 1235. I mean, a lot of people just go so far out that, the likelihood. Now that's a $10 It's a $10 spread. So that's kind of pricey. Meaning the potential risk reward. I like it a tighter spread, but again, this is the Russell. You know? So $45 on a $10 spread, well, it's $1,000. So what are you making? 4.5% return? That's going to June. That's again why I like to play things a little bit tighter. Because if I expect the Russell, there's my short-term trade, 71% probability. Where is it at right now? Well, it's here in a 6-month. And boy, that looks almost like a shooting star right there. Why does this look so much different than my chart here? That's really weird. Oh, this is 20-day hourly. That's why. I'm watching the short term. I usually play off a short term. That's why. Okay. See what a different picture, folks, when you go from a short term to a longer term. So you gotta, make sure you look at the macro picture too. So really, the Russell's going up, but you have a 10 cross the 20, the 10 cross the 200, or the 50. It looks like the 20 is about ready to cross the 50 here. You got a MAC still pulling down, even though it's curling up still. It's very possible this thing is just going to continue to tank, especially when you have historical precedent. Now, let's go to a 10-year just to verify this. Then I'm going to shut up and then ask you guys to give me some trades to look at. %70 probability, 1.51% move. Yeah, people are going way out here. Oh, it's a huge spread. $0.10 credit. So that's a what is that? About 3% return, 17 days. Wow, there you go. There you go. There's some people selling some spreads. It's only a 5 cent return, so I mean that's $5, folks. That's $5. You could make $500 as long as the Russell by the end of this week does not get to 1275, which is how many points away? That's 45, 55, 65, 7. It's 40 points away. The IV plus is 17. I've more than doubled what the IV plus or minus is. That's a good trade to make $500. You have plenty of liquidity with 64,000 out there. Now that's doing a $5 spread. I can see some people out here are doing a $10 spread. That's what a majority of these people are doing. I wouldn't go that far of a spread because you just got to put up more money. To me, that doesn't make any sense. Okay, any stocks you guys want me to look at? Oh, a couple more that I'm sorry. Got a few more that I want to talk about. Petrobras. I brought this up to my friend Jerry. Every time I think of PBR, what do you think of? Yeah, PBR. What do you think of when you think of PBR? I don't know. Maybe I'm from that old school of Pabst Blue Ribbon, right? PBR. That's what we used to call it. Well, looks like best rating or best profits. Well, best profit gives me a 4.470% probability. Best rating is a little bit tighter and a little bit stronger rating with 3.41. And if you look at where this thing is at, way, way overbought, folks. I mean, just stupid overbought, right? Now, this is what's going to blow you guys away. I mean, you want to look at short interest? I don't care what month you look at, 49,000 at the tens. Let's close that and look at July. 67,000, 85,000. It's just stupid volume and open interest. Crazy, crazy volume. Go out to October. It's still got 91,000 at the eights in October. Even January, 97. Then you had 102,000 at the 10. So obviously people are, I think there's a preponderance and a precedent of short interest though. So again, what do we have? We have a tool, right? We like to take advantage of the tool. It tells me there's a 70% probability. Are those great odds? Are those odds that I may play? I may. I mean, that if this was 80 or 90, I'd feel even more secure. But this coupled with this gives me a little bit more confidence to go into that trade. Okay. The other folks, I'm going to tell you right now, you need, if you ever want to own a stock in your portfolio besides Facebook's and IBM's and some of the other blue chips, you want to own Disney. And Disney pulled back today. I think at any, buying the pullback, I mean, buy calls, buy leaps, but Disney is a stock you want to own because it's just going no place but up. 4,600 contracts bought today, more than likely, 15,000 open interest, some short interest too. I don't remember what Disney had. I think it's these kind of, well, it's 80% long between now and the end of the month. Yeah, then it comes short. But really, you see this, no blue lines here at all. It's going to kind of meander sideways. And again, we're talking June to August, very flat months anyways. And then it pulls back up in July. But it's just a great stock, and I believe in the company. Anybody go see the new Avengers movie? Avengers 2 that came out? Anybody a Marvel fan? The Hulk or Captain America, Robert Downey Jr. and the Iron Man? Just since it came out, which was this last weekend, worldwide sales have been $875 million on one movie in 3 days. That's a lot of ka-ching for a company. And they have an incredible franchise there with Star Wars and Spielberg. And they're going to be coming out with a whole new series of Star Wars movies, all updated. So I think Disney's a buy, only because it's going to continue to go up. Okay, I'm pretty much done. Are there any trades you guys want me to discuss? I hope I answered questions about open interest and volume. One of the things you don't know, of course, about volume is there's people selling. Even though it's on the call side, you don't know if people are selling that. But as I said, when I see this kind of volume that's at the money, that's generally not people selling, people buying. And one of the things you want to look for, which is part of what I was attempting to do with Option Hacker and Keen on the Market, Andrew Keen, and same thing with the Jarian brothers at Option Monster. They have the same kind of service where they look for unusual volume, but you don't know how to play that because that's for people with big money that can go into positions and buy time, not for me. However, one of the techniques they're doing is something I was doing way before I even knew these services were there, is to look at volume compared to open interest. Is there a lopsided, is it lopsided? In other words, if I had a 1,000 open interest and suddenly I saw 3,000 volume, that normally tells me that big money, institutional money, some big trader is coming in and they know some kind of information that I don't, which helps with the probabilities and stacking odds in my favor. It doesn't always work, but generally speaking, that is true, especially when you're at the money. Out of the money, that's where people are selling premiums, right? That's they're collecting credit. That's what they're doing, and that's generally people that are going way out of the money. Way out here. There's a likelihood of Walt Disney going from $108 to $150 or $135 by June. Probably not going to happen. Okay. All right. Somebody wants me to take a look at Halliburton. Short term doesn't tell me beans. Oh. 60% probability to go down now. Where's it sitting? Yeah, I got 75% probability. It tipped the top of linear regression. 200 is coming down. Looks like the 10 wants to cross, right? Wants to cross. So I'd be a little leery of going into a position. If you're in it now, I probably would take profits and then wait for another re-entry if I wanted to go long, because I know all the oil companies have been pulling up. Amazon, let's take a look at AMZN. 75% probability early tomorrow to go down. I had a nice gap up, pulling up, but it's still above its 10 EMA. Doesn't look like it wants to fill the gap. It's just meandering sideways, pulled up. I think from a seasonal standpoint, actually seasonal standpoint, you want to play it long, 80% probability. So I'd hang in there. SLB, Schlumberger. Again, top heavy, Jerry. 90% probability to come down. If you got profits, take it. Wait for a re-entry. Okay, like I say, look at Tesla as a spread perhaps for this week, or by June, and then look at PBR. Somebody talked about VMware possibly going up. Oh, if you also want to look at on another ETF, it's TLT. 80% probability of going long, and TLT has huge volume and open interest, as you can see, on both sides, which means you got liquidity. That's the Treasury. Okay. Oh, and the last one, if you want to play, this is another thing that tells me that this market may go down, is the VIX. 83% probability starting now, believe it or not. I mean, that's coincidence, not exact. It's only 6 years of history of the VIX going up. So that's the fear index. If the VIX goes up, and there's a 90% probability it will tomorrow, according to this hash mark, that means there's a good probability this market is going down. So you can also play the VIX up. Solar City. What is Solar City? I forgot what Solar City's symbol is. Help me out, Jerry. I know there was FSLR. I don't know what's going on with them. Oh, not GSLR. Bouncing off the 200, acting as resistance. From a composite standpoint, it looks like it goes down, but there's a 75% probability. Good rating, though. Let's see if downloading data helps at all. Well, there's an 80 good strong probability to short this thing. Yeah, kind of followed that composite, ran up, and now it's starting to pull down. May do a little hiccup and pull up, but I don't see that happening because I've got a 10 that's crossed the 20. I got a 20's just crossing the 50. I got a gator mouth that's just going down for a fish for bottom feeding, and a 75% probability it's going to go down. So if First Solar goes down, probably FCTY is going to be doing the same thing. Well, that's a different story. I do got a cross MAC way overbought, way overbought, sitting at a 93% extreme, way up here. I know they've had a lot of good press. Long to the 17th, but that ride may have already been done. Again, we're talking 2 years worth of history here. And then we got a short coming up towards the end of the month. It may happen sooner. Long between now and the end of the month. I don't have enough history for Solar City to even give an idea. The only thing I can look at is from a technical perspective. Technically, this thing looks strong, actually, to continue riding up. Really gone sideways, but that 49 is just acting as real good. These two are acting as good support mechanisms. I'd be a little leery of being long in this right now on short term. Longer term, yeah, because I have a detrending price oscillator. But I do have a 49 that's crossed the 89, which tells me this is still bullish and going upwards. On my flex grid, this is a different one. It's a 15-minute, 30-day. Okay, this is a different setup than I did on my other one. Here, let me do this real quick. Well, this tells me pretty much to stay long. If I was in a longer term trade or buying some time, I mean, these are the things that you look for. This is a 1 year weekly. This is a 6 month 4-day. This is a 3 month 2-day. Gator mouth, gator mouth, gator mouth. This MAC's starting to curl over, as you can see in a shorter term. I don't have all blue bars. And it did reach a new high. So that's why when you go to a shorter term, I have this precedent of it starting to go down. Even though I got that 49 crossed, let's go to a 20-day hourly. Yeah, you could still be long on this. Still be long. You may have some hiccups along the way, though. It's a strong company. Oh, that's a good point. I didn't know that. Solar City trades right along with Tesla. That's right. It's owned by Musk. Duh. Thank you for bringing that up, Earl. I didn't have my ginkgo biloba today. So yeah, then I would definitely be playing Solar City long because it goes hand in hand with this is Solar City. Now watch when I put in Tesla. Everything tells me to go long. Just rock and roll. So good point. Thanks, Earl. So to that end, Jerry, Earl brings up a good point. What options suggest on VIX? I normally play the VIX very tight because you can make super good money when you go just a little bit out of the money. This thing doesn't move a lot. It moves, $1 a day, but $1.50, you can double or triple your money very quickly. So with that, if I was to play the VIX long, 8.28%. $21.12. Puts me at our target of $22.86. This is $1.14. Puts me at $22.26. This is a little bit more. So I would do the 22s with a 32 delta for 31 cents. That's about a 1.5% premium. So yeah. Yeah, 1.5%. Okay, David? Alrighty. I'm finishing up because it's going to take longer than I thought to render. Thank you for attending, everybody, and I wish everybody good trading. And until next week, we'll see you later.